Welcome back, and XRP is going to zero. At least this is what Peter Brandt is saying, and saying that the performance is so pathetic in the XRP ecosystem. We are going to discuss that. We're also going to talk about Internet Computer is now changing the game in staking yet again. Why I'm very bullish on Internet Computer Protocol. We're going to talk about the Bitcoin mining companies, the CeeLo blockchain, and much, much more on today's video. But make sure you guys are subscribed to the channel. We upload every single day almost, for the most part, since 2018 to bring you the latest happening in the financial world. Don't also forget to give the video a free thumbs up. That way you never miss a new video. We try to upload every day, although we're going to be kind of slowing down and pulling back a little bit as we enter this new bull market. Because, guys, there is no need to be discussing everything that is going on with every ecosystem every single day in a bull market. We know which ecosystems have been building. We know which ecosystems are strong. We know which ecosystems are going to do well this cycle. We've been talking about this for the last 3 years. And it is shocking to me that people are still like, but Cryptoviser, what about this? They're promising this. They're promising this. And it's like, I don't give a what they're promising, because at the end of the day, we are in the bull market, and bull markets are for deploying, bear markets are for building. And there's some ecosystems out here that kind of take this a little bit backwards. And some of that we're going to be discussing today with the XRP ecosystem. But before we go there, Bernstein is now arguing that Bitcoin's flattish price action is great for public mining companies. We've been talking about this for a while. I am more bullish on Bitcoin mining companies than most cryptocurrencies for 2024, maybe not 2025, but definitely 2024. And let's kind of understand a little bit more about what in the Bitcoin mining is going on here. Analysts at research and brokerage firm Bernstein are not worried about the flattish price action after the Bitcoin halving of Bitcoin, arguing that this can be great for miners when economics are driven by competitive hash rate wars. We're seeing that kind of taking place right now. They said, quote, Bitcoin price action has been flattish, but we don't fear any major drawdown here. We expect Bitcoin to remain a range bound in the high 50s to low $60,000 range and break out to the upside to continue its upward adoption trajectory as Bitcoin ETFs see allocation from retirement investment accounts, wealth platforms, and other institutional funds. And I agree with this, but a lot of this, we have to kind of get through the storm that we are in with the SEC, with the election cycle. And I don't know that we're going to see any reversals of these policies until after the election. It's gonna be really interesting to see how it all plays out. But keep in mind, now that we're post-halving, the Bitcoin mining difficulty has dropped 5.7%, marking the largest negative adjustment since the bear market lows when difficulties fell 7% in December of 2022. And remember, this was kind of right at that bottom point, right after FTX collapse and all the fear and uncertainty and doubt. And as you guys know, at the beginning of 2023, we started buying up some of these assets like Internet Computer Protocol because they were at historic lows. Now, granted, they went a little bit lower in 2023, but during that beginning to mid-year in 2023, a lot of that went up. And so Bitcoin mining difficulty is a relative measure of how hard it is to mine a new block compared to the easiest it can ever be. It adjusts automatically every 2016 blocks, roughly 2 weeks, to ensure that on average, a new block is found every 10 minutes, regardless of how many miners are actively mining on the network. So for example, when there's an increase in the number of miners, the difficulty of mining Bitcoin rises. Conversely, if there's a decrease in the number of miners competing to find new blocks, the protocol lowers the mining difficulty, making it easier for the remaining miners to discover blocks. Now, after the Bitcoin halving, a lot of small mining companies or just individual miners, and they may actually turn off their machines because it's no longer profitable to mine Bitcoin versus what it was before. And so as they take their machines offline, the Bitcoin difficulty decreases because there's less nodes on the network, right? And so let's understand a little bit more about the Bitcoin mining companies, right? Matt Siegel, we've covered him before on this channel. He's the head of digital research at Van Eck, which is a money manager, and they also have ETFs that are tied to Bitcoin-related stocks like their DApp ETF, which has all of these different stocks in it, mostly Bitcoin mining companies. But he said, to be clear, I think most miners will handily outperform spot Bitcoin through the end of the year 2024. And public filings do show that Van Eck, that asset manager that he works for, increased their holdings in Bitcoin mining companies year to date. And we've covered it. We've covered like all of these different Bitcoin mining companies. Now we have the largest one, which is Marathon Digital, which we're going to cover right now. But there's also a lot of small ones that are micro cap stocks, right, under $100 million and have the potential to grow significantly. But for these large Bitcoin mining companies, I think that a lot of the anticipation has been priced in, right? I mean, listen, do I think Marathon Digital is going to go higher? Yeah, but they already have a $5 billion market cap, right? So for Marathon Digital to get to $20 billion, it needs to 4x. For some of these smaller mining companies, which we're going to talk about some of them in a few minutes, 100x, 200x, 300x to get to $20 billion. And so that's kind of like the benchmark in my view. A lot of these microcap cryptos that had nothing, like no actual products or anything, they pumped to $20 billion during the last cycle. These crypto mining companies that are actually earning money through mining and growing their ecosystems, I think they have a great opportunity to hit that $20 billion at a low. And so Bitcoin miner Marathon Digital misses their Q1 revenue expectations and operational challenges. Keep in mind, the larger the Bitcoin mining operation, the more challenges they have from an energy perspective, cost perspective, keeping up with the fleet perspective. But this doesn't mean that they're not going to do well. But I think Marathon Digital kind of overshot their target recently, right? But we're still really kind of at lows for the year. At least year to date, we're at lows. I mean, the lowest it was about $15. We're at $17. And so if we look at where the price went after the earnings, clearly you can see a little bit of a dip from $20 down to $17. It's really not that big of a dip, but to some people it is, right? But I think generally the trajectory for these Bitcoin mining companies is much, much higher through the end of the year. The company mined just 2,811 Bitcoin during the first 3 months of the year. This is down 34%. They said Bitcoin production and therefore revenues generated during the quarter was negatively impacted by unexpected equipment failures, transmission line maintenance, and higher than anticipated weather-related curtailments at Garden City and other sites during the quarter. Keep in mind, if you're a smaller Bitcoin mining company, it's a lot easier to manage the fleet, right? And if part of the fleet goes down because of equipment issues or whatever, it's much easier for you to put all of your resources into fixing that. Where if you have multiple sites throughout the country and very, very large production, it's much harder to do that. You can't take your whole company and put them on one mining site and say, let's fix this issue, because you have 15 or 20 mining sites that are having issues. That can be a huge hurdle for some of these larger Bitcoin mining companies, especially during the bull market. This doesn't mean they're not going to do well. It just means that there's a little bit more risk, in my view, with the larger Bitcoin mining companies versus the smaller ones. Now, one of the large ones from an actual production standpoint, maybe not a market cap perspective, is Core Scientific. Now, we've extensively covered Core Scientific through 2023 as they were in the bankruptcy. And some of my viewers made 10x during the bear market in Core Scientific in 2023, because the Core Scientific bankrupt or during bankruptcy, their stock price, which was on over-the-counter markets, it went from 5 cents at the low all the way up to $1.20 or something like that, which is like over 25x. This is huge. And a lot of my viewers said in the comments that they made a lot of money from trading that stock while they were bankrupt. Now, as they were exiting bankruptcy, I told you guys I sold my shares because I didn't know what the post-bankruptcy Core Scientific was going to look like. And there was a lot of stocks that were going to be issued after the bankruptcy proceedings completed, right? And so that was, I think, in April, where they were releasing more shares in May. And so we may be past that hurdle. But what Core Scientific is doing is they're the number one Bitcoin miner by number of coins, right? How many coins they actually own. They say they may convert 500 megawatts of their energy, right, which is 40% of their existing power capacity, to AI. This says every $1 million per megawatt saved in capital expenditures represents $100 million in construction savings on a 100 megawatt data center. Basically, that just means there's $500 million in value that they're creating by converting this from Bitcoin mining into AI compute, because the AI compute is a huge issue, right? With growing these AIs, you need more data centers, more energy, et cetera. And the same thing that we see with Bitcoin mining machines, right? There's only so much that can be produced and so much that can be built out in a short period of time, that these AI data centers need more capacity. And so Core Scientific moving some of their capacity to AI, I think this is a good pivot. And I think that we're going to see a lot of the Bitcoin mining companies kind of doing this, where they're going to diversify their portfolios. That way they're not just in Bitcoin mining, which may not be profitable throughout all of time. And so if they can switch into AI and become profitable in an unprofitable Bitcoin environment, this could be good for these companies and definitely good for the stock. And so if we look at Core Scientific, which I do now own, again, 371, this is after their earnings. And I think we're, the week that I'm recording this video in the middle of May, this is when we're hearing a lot of the Bitcoin mining companies are going to be reporting earnings and giving forward-looking guidance, how they expect their companies to perform through the end of the year. And so I think, not financial advice, nothing I say on this channel is financial advice. I could be wrong about anything and everything that I say. So make sure you guys do your own research and don't make investment choices based on what I say. I could be wrong. But in my view, in my opinion, these Bitcoin mining companies are, generally speaking, up only for the next year or so. And this is based on historical data as well, based on previous cycles, where I showed you Marathon and Riot during the previous 2020-21 cycle. They did 45x from the Bitcoin halving to about a year later. So I'm excited. And as I've been explaining to my viewers, the time to load up, in my view, was yesterday. And so we're now hearing that Bitfarms, which is another Bitcoin mining company that has a lot of potential in my view, they have fired their CEO and rescheduled their earnings, which is like a little bit concerning here. Now, we're going to get into it, but let's kind of look at their stock first. $1.58, $765 million Canadian. So we had a little bit of a dip after hearing about this, the CEO getting the boot. But generally speaking, Bitfarms as a company, I think, is still okay, and they're still growing at a very rapid pace. So effectively what happens is Bitfarms fired their CEO and president after he filed a lawsuit against the company. In March, they announced that Morphy, that CEO, would leave Bitfarms once it found the CEO to replace him. On May 10th, he filed a complaint against the company in Ontario. Remember, this is a Canadian company, claiming damages for breach of contract, wrongful dismissal, and aggravated and punitive damages for $27 million. Bitfarms says that the claims are without merit and said that they are vigorously going to defend themselves. The Bitfarm chairman and co-founder was appointed the interim CEO. They also rescheduled their Q1 results to the middle of May, just a few days, I guess, to kind of deal with all of that situation. But this is, to some people, this is bearish, right? When I see this happening right before a bull market, this tells me this is actually positive. We knew the CEO was exiting. He filed a lawsuit, and so they said, let's just get rid of him now, right? Let's just kind of move on right now. It just seems like internal conflict that's going on within the company. But from a performance of the company standpoint, I don't think anything has changed. So as these prices are going down and people are fearful and saying, no, but Cryptoviser, let's get Marathon. Marathon's the largest Bitcoin mining company. Remember, $5 billion. This is 765 million Canadian, which is about 550, 600 million US. So if you do the math on that, Bitfarms is like, it needs to do about almost a 10x, right? A 9x, just to get to the same market cap that Marathon Digital is. And again, I think that Bitfarms doing a 9x is going to be a lot easier than Marathon Digital doing a 9x, going from 5 billion to 45 billion, or going from 600 million to 6 billion. I think 6 billion is an easier target. And so that's why I would be a little bit more bullish personally on Bitfarms. But, there are some other ones we talk about. Griffin Mining, GRYP. This is $1.70 right now, and this has gone up, and I think it's going to continue to go up. It's one of the smaller Bitcoin mining companies. The CEO and the executives on the team are from Riot and Marathon Digital, right? So they're, in my view, I haven't seen anything to indicate that they are not trying to become another Marathon or Riot. It seems like that's what they're going to try to do. And so I think that there's going to be a lot of excitement coming to Griffin Mining. Not financial advice, do your own research. XRP. Now, Peter Brandt, who is a legendary trader in the market since 1975, he wrote this on X about XRP. He said, it's actually fun poking a stick at XRP aholics. He said, my comparison is to Bitcoin, not USD. So here is what I don't understand. How can XRP bulls be so insistent that XRP is near all-time levels versus Bitcoin, and in fact has only closed higher than the present levels in 6 of the last 126 months? So let me translate this for you. Essentially, he compares in a previous tweet, he said, from a pure classical charting point of view, this chart looks like it's headed towards zero, and effectively saying that XRP is going to zero when compared to Bitcoin. Now, I don't necessarily know that XRP is going to zero, but I do agree with Peter that this cycle, XRP is not investable. Cardano, not investable for many of the same reasons. And this is purely from a technical standpoint, from a charting perspective, right? Now, if you get into the technicals about Ripple and all of that, right, maybe you're going to have something. But at the end of the day, guys, Ripple is selling their XRP every single month since 2017, probably before 2017, but at least since 2017, when they started their escrow for half of the supply of all of the XRP in existence. And they have sold almost every single month consistently. And who are they selling it to? They're selling it to you. Now, I don't necessarily think there's anything wrong with that, but how can the price go up when the company that is building the technology to advance the crypto that's underlying is not even holding the coin, right? You're holding the coin and you're being a diamond hand, when meanwhile, when you compare XRP to Bitcoin, and we're going to show you the chart, it has only closed higher than present levels in 6 of the last 126 months. He said, people are so cocky about an asset class, XRP versus Bitcoin, should have a little bit more performance on their pathetic side before being too critical. Because obviously, the XRP army probably went after Peter the same way that the Cardano ecosystem does. But listen, guys, this is the XRP to Bitcoin chart, right? Look at this chart. We're lower than we've been since 2018. Once it went lower than this. Now, the XRP army will say, but Cryptoviser, but Peter, if you look at the chart, this means that this is bullish, because this means, look at what happened after we hit these low levels. We jumped back up. But we didn't jump back up to record levels, right? And so XRP has been in this kind of range-bound area, if we look at US dollar perspective, which many people like to look at. It's been in this 50-cent range for many, many years. And it didn't hit all-time record highs during the last cycle. And so people are like, but Cryptoviser, this is the best crypto ever. It's like, no, it's not. And in my view, the XRP army, the Cardano community, these are just holders from the last cycle and the cycle before that. These are people who never sold their crypto, or sold and then rebought in the bear market, thinking that we're going to repeat the cycle just because that's how things happen. We repeat the cycles. That's not how things work in the markets, right? And I'm not saying this because I want XRP to go to zero, or Cardano to not do well, or whatever other crypto, Tron, right? I'm saying this because there are a lot of paid shills out here, and people who have very, very heavy bags. This is the same thing I said about Solana, and I still stand by this with Solana. The reason you see these large traders and venture capitalists shilling Solana is because they put a lot of money into the Solana ecosystem, right? Whether it's from a strictly coin perspective, or they build companies and they're building products for it. That's why they're shilling it, right? And so obviously they want it to work. But what we talk about on this channel is investing. And from an investment perspective, these are not investable assets, especially when you compare it to all of these other ecosystems out here, like Internet Computer, which we're about to talk about in a minute, like Near Protocol, right? Like Aptos, like Cosmos, like Polygon. These are newer ecosystems that are doing extremely well from a price standpoint. And again, so XRP is underperforming and it's only been at higher levels. It's been at these low levels, right? 6 of the last 126 months. And so, yeah, this chart does not look good. This chart looks like XRP is trending to zero. And if you're holding XRP and you're saying, oh no, this is bullish, and nobody in the XRP ecosystem is even addressing the fact that Ripple continues to sell their coins, it's unbelievable, right? And so when I look at the sentiment in the market, not the ecosystem itself, not the XRP army, not the Cardano community, right? The sentiment outside from people who are not maximalists, who are not have heavy bags, there's no excitement in these coins, right? And so that's just what it is. That's just what it is. And you have the traders who have been doing this for multiple years, just looking at the technicals on the chart. And I'm not saying Peter's going to be right. I don't know if he's going to be right. But what he's saying from a technical perspective is accurate, right? If you're investing based on how you feel, you're not investing. If you're investing because you love the project, that's not investing. Investing is literally trying to increase your value, increase the worth of your, why would you buy a house if you know that the community that your house that you're buying in is going down, the prices are going down, and people are leaving and they're not building anything new there, and there's no new companies coming, and just hoping and praying that that's going to change. Look at Detroit, right? People are still. Somebody actually asked me a few weeks ago, "Oh, let's look at some properties in Detroit. We can build it up." I said, "Build it up for what? Nobody's moving there. There's no companies going there, right?" Then somebody asked me about Texas, Austin, right? There are so many empty properties in Texas right now because the property taxes have gone up so significantly that the pricing and the HOA fees or the maintenance fees for these apartment buildings, they've gone up so high that it's comparable to major cities like California, like LA or New York or Chicago. And this is in Austin, Texas, right? So yeah, you're going to save some money from an income tax perspective, but then you're going to be paying basically significantly more from a property tax or maintenance and HOA fees, and that's going to offset from one to the other, right? So there are always positives and negatives, and that's how you have to look at these markets. That's at least how I look at the markets. And so either you want to win or you don't want to win. I'm not saying don't hold XRP, like maybe holding a little bit of XRP just in case it does well, but it's like, even if there's a question mark whether XRP is going to do well, there's no question mark whether Internet Computer is going to do well. There's no question mark whether Near Protocol is going to do well. There's no question mark whether Dogecoin is going to do well. There's no question mark whether Render is going to do well, whether HBAR is going to do well, whether Cosmos or Aptos are going to do well. We know these are going to do well because they have been deploying, and there's excitement, and there's new investors that want to invest and use the products. I mean, Render has Apple using their products for compute. And people are still, but Cryptoviser, XRP is better than Render. Okay, that's how you want to invest? Go for it. Go for it, right? I'm just telling you guys my opinion. You don't have to agree with it. And I may not be right, but this is my opinion. Anyway, moving right along to a crypto that I am loving. There is new conversations in the Internet Computer ecosystem about the staking ecosystem changing. But before we go there, it's important to note that since January of 2022, the NNS, or Network Nervous System, this is the Internet Computer's core, they've added 60.5 million ICP coins, right? So the NNS is effectively the staking and governance ecosystem. It's the core of the Internet Computer. That's how I view it. And if we look, the neurons is basically the staking ecosystem, right? That's what they call staking, neurons. And they've added 60.5 million ICP coins through the bear market, through people fudding and hating on Internet Computer. But now things are looking up. And so we've already covered AI in Internet Computer. We even have Bitcoin maximalists cheering on Internet Computer. I want you guys to see this tweet before we get into the staking changes that are going to be occurring. And by the way, if you're up to this point in the video, don't forget to give the video a free thumbs up. Also hit the subscribe button. I'm trying to upload as much as possible, but there's a lot going on in the markets. And, like I said at the beginning of the video, we don't have to upload necessarily every single day to cover everything, but give the video a thumbs up and I appreciate the support. So this guy, Lefteris, who's the founder of the Rotkey app, the portfolio tracker that protects your privacy, he wrote on X, the changes for the German Kraken seem really serious. He said, we lose access to Dfinity's ICP, XMR, Celestia's TIA coin, Optimism, DIM, Starknet, and a lot more from July 10th. Now, I don't really fully understand exactly what he's talking about here. This is the only announcement that I saw from Kraken. It says Kraken expands European footprint with German strategic partnership. And they're going to be powered by DLT Finance, which I believe is some type of regulated platform. Now, the only thing that I could see here is that you have to re-verify your account, re-KYC. Maybe they don't want to do that. Maybe the derivatives are going to change. But I didn't see anything about losing access to certain coins. But maybe the brokerage, DLT Finance, just doesn't have access to those specific cryptos that we discussed or that he's worried about. But anyway, the reason I brought up this tweet is not because they're making changes, but because another user asked him, he said, why do you want to trade one of the biggest Ponzi's, Internet Computer Protocol? Isn't it good riddance? Fellow investors will save money not being able to buy that token. Now, he responded and said, it's not a Ponzi. Internet Computer Protocol is quite a legit blockchain, quite different from the others we are used to. Having cringe marketing at launch does not make something a Ponzi. And so if you are holding ICP, you guys are in the ICP ecosystem, definitely go and follow him and support him for standing up. He, generally speaking, I think he's more of like a Bitcoin maxi, but clearly he kind of believes what a lot of us believe who hold ICP and believe in ICP is that, yes, they had a terrible launch, right? I think go look at my old videos on ICP when it first launched. I thought it was a scam. I thought it was a full exit scam because it went from $800 down to $2, right? But what I saw during the bear market, and remember, bear markets are for building. Dfinity and Dominic, they didn't let the failed launch and the manipulation of the ICP coin from the likes of FTX and Alameda Research, they didn't let that affect them. And they continued to build and grow. And during the bear market, Dominic and Dfinity continued to show the world what they were doing, what they were building. And now we're in the bull market. And Internet Computer is the best positioned crypto for AI compute out of any of them. Any of them. Fetch AI, Ocean, Singularity Net. Singularity Net has been around for years. No product. Internet Computer, it's been around for years at this point, right? But what did we see Dominic just show us a few weeks ago, a few months ago? That AI is already running on the Internet Computer Protocol. It's already running in smart contracts or canisters on ICP. And so that's what's happening now. And it's in very early stages of production. But what else are they building? I believe, based on what I've seen from ICP hubs and Dfinity, that there are hundreds of ICP developers worldwide. Hundreds, either independent or work for Dfinity. And so they're on hyperdrive right now. We are also seeing other protocols copying the technology that Internet Computer has implemented. Chain fusion or chain key cryptography. Near protocol started doing that. And Near is also targeting the AI sector. But ICP is not a one-trick pony. ICP can do many other things. And so getting back to the neurons and the staking ecosystem changes, Dominic, the founder of Dfinity and CEO over there, he wrote just the other day on the Dfinity forum, possible optimizations of the NNS tokenomics. And again, NNS is the network nervous system. Whenever you hear NNS, just think of like the Internet Computer core, right? The core of what the Internet Computer is. That's the way I view it, at least. Anyway, he wrote this in May of 2024. He said, I want to propose 2 changes we could make to the NNS governance with the aim of optimizing network tokenomics. These 2 changes are not slam dunks, but they could provide significant advantages. And our purpose should be to continue improving tokenomics in the same way that we constantly make the network faster, more efficient, and more capable. as we move into the future. The ideas are standalone, so we could take both of them, one or neither. Now, he talks about this update here, which we're going to come back to in a minute because I don't want to cover the update before we cover what he wrote. So the proposal one is reducing the neuron dissolve delay to reduce inflation. Now, keep in mind, what is neuron dissolve delay? When you stake your coins or in the NNS, you're effectively you lock them for a period of time, right? And that could be from 0 years to 8 years. Okay. And when you lock your coins, they earn rewards and they help protect the network. Now, 8 years is a very long time, and obviously there is some type of inflationary aspect to staking, right, in any ecosystem, because where are you getting the rewards for staking? They're coming from somewhere. Typically, they're either newly created or they come out of the maximum supply and go into the circulating supply. But generally speaking, that's kind of how it works. So when you hear the dissolve delay, that basically just means how long you're staking your coins for. So keep that in mind. So he says ICP has fought its way through significant sell pressure pretty well. I don't know about that. We went from $800 down to $2, but I understand what he's saying. Continuing. He said further step downs in sell pressure are also coming. He said, our belief is that major venture capitalists who bought in early will be exhausted this year, which will put the network in an enviable position. The other major networks remain mostly held by such parties behind the scenes, venture capitalists, often in the range of 75 to 85%. He said, yes, you read those insane numbers correctly. We know that happened in Solana, right? A lot of these major VCs, they bought Solana at 25 cents or 50 cents. And a lot of the coins went to these venture capitalists. He said ICP holders are already vastly more decentralized, and the more so it becomes, the better. Nonetheless, finding ways to allow the network to breathe still makes a lot of sense, and one of the ways we can address this is by reducing inflation. Today, the primary source of protocol inflation on ICP is governance staking. The question is, can this be reduced by updating the protocol without breaking promises the network has made to those who have already staked? The answer is yes, potentially. So this proposal is outlined in these 4 steps. Reduce the dissolve delay of all the neurons by 5/8 to 62.5% of what they are today. Effectively, that would go from 8 years down to 5 years. So that would be the highest amount that you could stake for 5 years. Personally, I don't know why anybody would stake for 8 years. I've covered this in previous videos. I wouldn't even stake for 2 years. I'd like to have access to my funds. I don't want my coins to not be accessible. I understand why people do it, and obviously the networks need people to do it. But I personally believe in like liquid staking or delegated staking personally. But anyway, it doesn't matter because you don't have to stake to own the coin or to believe in the ecosystem, right? Anyway, he says, number 2, the age property of neurons would stay the same. 3, the minimum dissolve delay at which a neuron can gain maturity by voting would be reduced to around 3 months. And 4 is the overall notional voting reward distributed by the network, which is logically distributed by votes to determine how maturity increases, would be reduced, such that the rate at which a neuron's maturity grows, given some amount of locked ICP, dissolve delay in age, would remain almost identical to that of today. He said the main benefit to tokenomics is that this would reduce the amount of new maturity that neurons gain by just under 20%, which is definitely significant. This would mean that if you have an 8-year neuron today, and this changes were made, then you would find you now have a 5-year neuron, and maturity would grow at the same rate. For 5-year neurons today, those with 6-month neurons would then have 3.75-year neurons, but they would still gain maturity since the minimum threshold for gaining maturity would be reduced to 3 months, which would be useful for those wishing to try out governance staking for the first time. 5 years is still very considerable time to make this commitment, but it's not as mind-bending as 8 years, which makes the system more friendly. What about the hardcore 8 years, right? We have a lot of people who say, but Cryptoviser, but Dominic, we're in the 8-year game, right? We're locking our coins for this amount of time, 96 months. Would this have become a 5-year gain since they now have 5-year neurons? He said, my suggestion is if you identify as this, then you would continue to identify as before and the moniker stays the same. Now, personally, guys, here's the deal. The network should not move in one direction or the other based on people who are already staking, right? So to say that in other words, the people who are staking for 8 years or 5 years and they want to continue to stake for that long, oh well, too bad, right? Just restake at the end of the 5 years and you could restake for another 5 years. The network cannot maintain the parameters just because a small group wants to stake for that long. I understand why they do, but I believe that parameter changes in the network need to be made, not just internet computer, all these ecosystems. One of the big critiques that people have about I don't even want to talk about it, but Cardano is the IO Global continues to say, oh, we're going to change the network parameters. We're going to change the network parameters. We're going to update it, make it more decentralized. And they're not doing any of that, right? And they haven't done any of that. And so the network parameters are staying the same. You keep the parameters the same, it doesn't allow changes to occur. It doesn't allow the network to advance. And most importantly, newer investors that come in and say, wait, you want me to stake my coins for 96 months, 2 cycles? That's ridiculous. And they just end the conversation there, right? You could say, but guys, you can stake for 6 months if you want. You could stake for 3 months if you want. You lost them at 8 years. And so I don't even think that Dominic should have even put this in the proposal, right? It doesn't matter what the people who are already staking believe, right? Or feel or want. Because at the end of the day, 5-year staking, at the end of that, you could just restake it for another 5 years. There's really no change to what you're doing, right? And in fact, the network is actually, in my view, reducing your risk. Because if the network doesn't work out and the coins don't go to $1 bazillion, and at the end of 8 years, you're left with nothing, you're going to be pretty pissed off. And once you stake, yeah, you can unstake, but it's not as easy and you get penalized and all of that. So generally speaking, I do believe that this is a good proposal. Just generally speaking, this is my initial reaction to it. And I think that this could be positive, right? Especially for the inflationary aspect. Now, the update was forum discussions on this proposal. Some people were not reading through the replies in the thread. The proposal was modified so that 8-year neurons would not be forcibly reduced to 5-year neurons. In the modified proposal, it would only become impossible to set dissolve delay over 5 years in the future. And the delays on existing neurons would be brought down if their owners wished. Meaning, if you want to stake for 8 years and you're currently staking for 8 years, you're going to be grandfathered in. But I don't know why people are arguing that. Right? Again, if you want to stake for 8 years, stake for 5 years and then stake for another 3, right? But you're going to hold back the whole ecosystem because you don't want anything to change. You're part of the problem that's going to hold ICP back. That's my view. And I'm not necessarily individually talking to any person. I'm just giving you guys my thoughts on why somebody would even argue with not wanting to update this. Not based on any fundamentals, just based on, but Cryptoviser, my coins are locked for 8 years and I don't want that to change. It's like, okay, but the network is not just about you, right? And if you want your coins to be worth more in the future, you have to understand how inflation affects the tokenomics and how investors, and I'm not talking about individual investors like us, but like large scale investors, they're going to look at the tokenomics and say investable or not investable. So that's kind of my viewpoint on proposal 1. So far, I'm for it. Anyway, moving on to proposal 2. Swapping locked ICP for unstaked maturity. He said you should always get your own tax advice, but by design, maturity is an attribute of a neuron, not a crypto that lives on a ledger like ICP that can be transferred and sold. Furthermore, the amount of newly minted ICP that a neuron can produce by applying its maturity is indeterminate and subject to modulation or changes by external factors like price trends and even updates to the NNS, network nervous system, further indicating that maturity is part of the value of a neuron and has indeterminate value. This design means that when a neuron gains maturity, this is not realized income. However, it is hard to argue that when the owner of a neuron uses its maturity to produce new ICP by spawning, then this represents the generation of income, since the newly generated ICP can be transferred and sold and has more or less determinate value. And in most jurisdictions, income tax will be due on the new crypto that you have produced. Then, not when you sell it and not at the end of the dissolve delay. That year, right? He says the maturity of voting neurons increases near continuously, and its nature arguably provides administrative advantages compared to traditional staking, which regularly pays out crypto, forcing constant accounting. Nonetheless, there are some disadvantages. Perhaps the largest disadvantage is that maturity is an attribute of a neuron and not a crypto. This means that it can't be used in things like DeFi. There is a lot of maturity sitting in neurons that might be useful if they were deployed and unlocked ICP. We might try to fix this. Effectively, he's saying when you're getting these rewards, right, or these mature neurons, they're not liquid, right? You can't use them for anything else. And so changing that would be good. So this proposal is when a neuron has unstaked maturity, the owner can swap that unstaked maturity for ICP that is locked inside. For example, such that the unstaked maturity becomes locked inside and the ICP is freed. Currently, maturity can already be staked, so this is not a big leap. Here are some of the examples of benefits. Unlocking your pre-existing ICP is tax neutral, so the owner could, for example, transfer the newly unlocked pre-existing ICP into a DeFi service and borrow against it. This might unlock more liquidity for DeFi, right? Because you're not minting the coin. These are already created coins that you're just kind of, again, it's kind of like liquid staking. If a neuron owner needs to realize fiat gains for a financial purpose, they could sell their newly unlocked pre-existing ICP, paying capital gains rather than applying maturity to generate new ICP for sale, which is subject to income tax. So effectively, it sounds more like you would unlock the coins that you already put in the ecosystem, and the newly unlocked coin, or the minted coins or the rewards, those stay locked. That's kind of how I'm reading it. Maybe I'm reading it wrong, but again, maybe Dominic needs to do a video on this to explain it a little bit clearer in non-technical terms, right? Say staking instead of neurons and stuff like that, because the general crypto ecosystem still has no understanding of the verbiage in ICP, and I think this is a huge barrier for internet computer. But what I try to do is break it down from my perspective and how I'm reading this, right? So he says, for example, in places like the UK, capital gains tax is 20%, while income tax is 50%. This would make it impossible to sell less ICP to realize the required fiat gains. This might result in less forced sales. And number 3 is if a neuron owner wishes to have unlocked ICP to swap for some other token, and that would otherwise have to apply unlocked neuron maturity to produce new ICP, then benefits as per advantages in 2 are above. Again, what the hell does that even mean? Honestly, I have no idea. Way too wordy, not in English, need to understand a little bit more. But generally speaking, my take on proposal 2 is I still need more info before I personally would say, yeah, let's go for it. But again, I'm just one user. I'm just telling you guys my opinion on it. But it sounds like you would be able to unlock your coins and lock the matured coins or the reward coins. That way, you're not technically receiving, and the coins that you're pulling out for DeFi or whatever, those are the coins that you already owned, right? So you're not really receiving them, and they wouldn't be considered, they would necessarily be considered like a tax implication. But again, this is very different for different jurisdictions around the world. I know Dfinity is based in Switzerland, so they have probably different rules than people in the US or people in Mexico or China or whatever. But generally speaking, proposal 1, I agree with. Proposal 2, need more info on, but generally speaking, I think that I agree with it as well. But that's kind of what they're proposing. And for all of the long-term OGs in internet computer, you guys have to understand that you have to be flexible and open to big changes in the network, because this is what is going to propel ICP forward, in my view. The ecosystems that are not for that, which we've talked about a lot of those in today's video, these are moving out of the top 15, top 20. And what I think for internet computer is that it's going to be in the top 10. And part of entering the top 10 is making these bold changes to the network. And yes, it's going to piss some people off because they don't want anything to change. They want to still be, staking for 8 years. But generally, nobody wants to stake for 8 years, right? A lot of people are currently, but these are, if you look at the dashboard, right, these are people who have been ride or die ICP from the beginning. But to bring the next wave of users, venture capitalists, and investors, it needs to be flexible, and it does need to change. That's my view. That's my opinion. Hopefully you guys enjoy these type of videos. Don't forget to give the video a free thumbs up. And remember, we can agree to disagree. That is totally fine. These are just my thoughts and opinions on the market. Let me know what you guys think down below. I'll see you guys tomorrow. Invest responsibly in Crypto On.